couple of letters that were really cool. I cut out the email address on this one. This gentleman was following Euro CHF, which was fantastic. It had a couple 3 days down. Very nice spike to the low at the end of the U.S. session. It came back and hit it again right at the London Open. I got some snapshots of it. We'll look at it. But he figured they would push it to the ADR. They did. Looking at the Mayo, I took it there for 252 pips. I see how smaller traders had their buy orders just above the quarter wood, which is a consolidation or accumulation zone in the market. They wanted to trigger them orders long, and I said I bet they will reverse better than 30 pips to take a lot of them before the continuation. Look, I don't know if you can see that on my screen. Homework's still coming in. Shame on you guys. All right. Anyway, this was a nice trade, 252 pips. Great job. You know who this is. This is from Dave McCoy. He's the real McCoy. I joked around. He's turned the corner. He's been around me a little while. Met him in Orlando, a fantastic guy, an eye doctor, but I'm still blind. He didn't help my vision. I don't know what's going on over there. He took EU short. Reversal got his 50 pips. EJ got 50 pips. GJ got 65 pips on the same setup as EJ. Fantastic night, Dave. Proud of you, buddy. Glad to see this. And this is from Murray, I think. I finally turned in the corner, not falling for the stupid circular and counter trend trades. I wanted you to see that and perhaps comment tonight on 2 trades I posted in the forum earlier. Haven't had a chance, buddy. I'll look at it later. I increased my demo account 25% in 2 trades with about 2% risk per trade, no fear. Would have put 10 standards on them. That's how certain he was of the setups. Fantastic stuff. Great to hear it. Some of the markups. Lisa Stewart, if you're here, this is an excellent markup. Proud of you. Great job. This is what your markup should look like. A lot of you, it did not. No problem. This is what it's supposed to look like. Okay, here's another one. The name fell off, and I'm sorry. I don't know who I dragged this email out of, and there were so many emails I couldn't go back. If this is yours, great job. Fess up. Let me know. You should be proud of it. I'm sorry. I won't make that mistake again. I dragged it to my desktop, closed the email, and couldn't remember where the hell it came from. Sorry about that. But this is an excellent markup also. Okay? Some of the people asked me the trade that I was eating at, having dinner at the Columbia, and missed it, the one that Rick grabbed. Yeah, can you guys see this? It says some people say they can't see my screen. I didn't ask if everyone can hear and see. Should not be a blue screen. Okay, good, good. John, reboot, refresh, download Java. That's the 3 solutions. Look, come in and out, reboot your computer, and make sure you have the most recent version of Java. Okay, thanks, Asubio. Good stuff. All right, look, they set the low here. This is GJ, pound yen. The trade was better actually in EJ, but they both set up identical. Okay? They have the low formed, they pull away the whole session, and they come back and nail it again. Okay, what I want you to see is variations on the theme. They hit the same thing 3 times, right to the 4-hour mark. An easy grab out in 3 bars. Okay, this is EJ, Euro Yen, which is the same setup, but I want you to see how the second leg, let me grab my marker, sorry about that. The second leg came in here. See the blue tracer right there where I drew the yellow line? The second leg came right down to the previous level, opened the spread, pick up the orders, and got the hell out of there quick. Your entry is right here, and in 3 or 4 bars, you're up big. There's absolutely no pain or no drawdown in that trade. Right? I know I told you that in the thing, and you called bullshit on me, told me I'm crazy. I promise you, in 30 minutes, you were up big, and there was no pain on that trade. You'll start to recognize these things. The market maker does the same crap over and over. That's all he's got. He can hit your stops up or down, change the direction that he moves off of one of these formations once he catches the retail traders going the wrong way. Once you understand this, the game is 90% over in your favor. Okay? Understand it's just variations on a theme. He'll make deeper stop hunts or deeper vector candles to try to trick you, to make you perceive momentum. All right, this is hilarious to me. I don't trade the Turkish lira / Japanese yen, but people say, can you trade this in every pair, anytime, any place? The answer is yes. Look at this pair right here. It's the Japanese yen, Turkish lira. When's the last time you ever looked at that pair? I know, me either, except today. There's your vector, 3 to the high, 4-hour resistance. They pull down, consolidate. There's shift the zone. There's your entry. There's your U.S. reversal, W formation, back to the watermark. Hilarious. To me, anyway. It's in there. Turkish lira, Japanese yen. This is a repeat of what happened last night. Here's your consolidation zone. This happened in euro. This was a few weeks ago. There's your stop hunt low. There's your vector, 3 to the low. 3 swipes at the low in the shadow box. There's your entry. No pain on the trade, except the spread. The spread's brutal on that pair. Straight green candles rise right past the mayonnaise. And notice in here how they come back, test the mayonnaise, and continue on. They test those points because people trade the average or moving average crossovers. So those points have to be tested. If you know better, know where you are in the cycle, you won't fall for it. I think Tony T sent me a slide where he tried to short something similar to this. Tony, you got to know where you are in the cycle. You tried to short level 1 consolidation after the peak. All right, I know it's a mistake a lot of you make. You need to understand the shadow boxes, the timings, where you are in the cycle to not fall for those type of things. Okay, I showed you Turkish lira. Here's last night. Okay, Euro CHF. This is the one I was looking for. Euro CHF, look. It's been dropping tremendously. I think it fell over 800 pips. Stop hunt right out of the box. There's your consolidation. There's your railroad tracks to the low. At the appropriate time, that trade was painless. You were out in about 40 minutes or less. 35 minutes. It was over. Second bar, not 1 ounce of drawdown. The spread was the drawdown. In profit immediately. Stop loss goes below the low. That's a beautiful trade. Coming off, this is, look, pay attention. Let me toggle this so it goes away. A big, fat W right in your face. There's the entrance. The entry, right? See it? GBP CHF, Euro CHF, all the same. Okay, this is Euro CHF. The only difference, the spike came at the changeover. See it? The spike came 5:15, 5:30. They held it. It was a little bit later. It was a little bit behind the other pair. No big deal. But don't you see what's in here? You have your drop. 1, 2, 3 intraday. 3 levels of drop. Spike the low aggressively. Repeat the level at the London Open. They come back. They fail to take out the low. Look very closely right here. Right there. Let me draw a big fat arrow for you. See the blue tracer in there? Light blue tracer? When they pin the light blue tracer, that is evidence that they are picking up the orders on the other side of yesterday's low. But they do this by opening the spread and not releasing other traders. They're stuck -5, -2. Have you ever been in a trade where you get really close to getting out, -5, -7, you think you're out, and all of a sudden they shifted away from you? Right? Has that happened to you before? Of course it has. They know this. They come into the same levels, spike it, open the spread, pick up the orders, and they get the hell out of there. Look how quick this trade went into profit, and they got out of there. This was a 200 pip rise straight before you had the first level of consolidation stutter. Notice where it stutters. At the 200. Why? Because traders probably tried to play the bounce short on the 200 EMA, which is crap. The signals, the pins to the mayonnaise and the shark fins and all the stuff I'm going to cover are meaningless unless you understand where you are in the cycle and know. If they pin to the mayonnaise as a stop hunt, that's a setup. If they pin to the mayonnaise after the stop hunt in the middle of the run, it's a different story. Stuff I'm going to talk about, variations on the theme, understanding where you are in the cycle. Okay? A lot of you wrote this to me. Someone said in the letter I wasn't supposed to trade, but I did. Sorry, but I couldn't help myself. I saw this and I about fell out of my chair. I love emails like that, but even though you should just be observing, not trading, that's fine. But it was kind of easy last night. Every major did this setup after the drop, or after the correction. Why? They let out their money. They let out their money. They let out their money. Man, we're running low. Let's correct against the trend. Let's rise price against the downtrend to get our money back. Understand, start thinking like a market maker and stop thinking like a retail trader following the technicals that everybody else sees on the chart. When you see something so obvious that it's a downtrend, you need to start thinking, apply the brakes and look for the reversal. This can be hidden behind news, can be hidden behind any geopolitical event, any garbage, the debt ceiling, they blame it on anything. Anything that's out there, they'll blame it on. That is on purpose. They create an attitude or a sentiment about the market. The Eurozone's crap. Euro's going to correct. Euro's going to correct. Out of nowhere, Euro rises. Understand this is on purpose, and it's to get you to chase the wrong directional move. All right? No, I don't want to offend the guy. I took the email out. This was the worst email I got. Didn't I spend 20 minutes talking about this clock being a piece of crap? No offense to the guy that sent it. I'm not mad at you. I'm just mad that you didn't pay attention enough for me to tell you that these session times are shit. I told you the times I gave you on the slide are solid gold. Everything else that's out there is propaganda to keep you trading incorrectly. This slide comes from people's inability to understand the session changeovers. If you sent it, I'm not yelling at you. All right? Do not use this clock. Use the times I gave you. There's a script in the forum to ping your broker server and get the GMT offsets for the server. I think Gary put it in there. That's what I want you to use, all right? And if I misunderstood why you sent this to me, I'm sorry, but this like broke my heart. I spent an hour talking about time ribbon matching up, going over the times, everything else is crap, and then I opened the email and saw this clock. I fell out of my chair for once. All right? Okay, let's see. All right, let's get these photos out of here, and I'll get into the slides. We'll get caught up where we were. Taking me a second. All right. Some of your markups were not as good as this, and I'm not picking on anybody. I just want you to get it right. It's important. We're going to do some training on how to do the homework, but this is the kind of markup stuff that we're looking for. Get the times, the shift bars. Today I'll make a list of the things that we talk about that you should be looking for. Okay? All right, let me get caught up. You guys are not taking a break that fast. All right. We're going to talk about the trading zone and how it's set. All right? I'll take questions at the end of the class. Just relax. Open your mind. Enjoy yourself. I see a lot of stuff flying by. We'll talk about the setups. Let's talk about the trading zone, how things are set up. Don't worry about the charts right now. Just try to open your mind to the concepts. It's coming. Relax. We'll get there. Okay? All right, the trading zone. I want you to learn how to identify the key points on the chart where you can safely enter into trades. That is going to answer your question about the M's and the W formations. Relax. The highest probability setups that will allow you to become most profitable. I didn't say profitable. I said most profitable. I want you to nail this. 8 out of 9. 8 out of 10. That's the kind of success rate I want you to have, hit rate. Okay, so let's go over it. The ideal Asian range is 50 pips or less, right? Tokyo channel, for you guys to know what that is. All right, some people are saying they cannot see that. Barbara, can you? There's a slide up there. If you're having technical problems, my slides are up. I know my mic's working. If you're having technical problems, you need to log out, log back in. Make sure you have the latest version of Java. All right? Okay, Ben, good. Thank you, Adam. Thank you. All right. Ideal Asian range, less than 50 pips. If it's bigger than 50 pips, I'll show you how to handle that. The trading zone